All right. Good morning, everyone. Is this on? I can't tell. It is. Okay. This is it's 9 o'clock or so. 9 o'clock, 9:01. We will not have a quorum. It does not look like this morning. It looks as if Councilors Roebuck and Councilor Orpesa have not joined us this morning for the Finance Committee. I hope they're both well. And what we will do, since we do not have a quorum for the Finance Committee, is we will not be meeting as a Finance Committee. We will be meeting just as discussion items. That's all we're going to do. It's not a meeting by any stretch of the term. So if you're watching live stream, please recognize and understand that there are 4 of us in this committee. There are only 2 here, Councilor Kennard and myself. So what we're going to do is we're just going to hear a little bit and just have a discussion, just like you would sitting over at the coffee shop. There'll be no action taken whatsoever, and there's no decorum, anything like that, because we will not be in an actual meeting, okay? So I guess since we'll do it like that, we'll just look at a couple of things here on the informational reports. Maybe we could just hear and see where we are on some of that and just talk.
Thank you, Mr. Chair. Just real briefly for the informational reports on the GRT. For November 2020, as you can see in the attached report, our actual collected was about 2.9. We had originally budgeted about 2.1 just because of what we anticipated. We projected what was going to be the activity. That is a good variance of $738,000. Our trend continues to kind of be stable as far as from prior years. This is the GRT total year-to-date collected. And as you can see there, actual collected is about $14.9 million. Again, we projected, because of the downturn that we anticipated was going to be the impact of COVID, we would be at 9.9. So we are up about $4.9 million from our projected line. But as you can see, of course, that line is starting to kind of stabilize as we start going into the next couple of months in the fiscal year. We continue to monitor the GRT. I mean, we want to be mindful and just monitor it carefully. I know Joe had provided the council a report on his review of the different industries from comparing 2019 to now, and there has been some decrease on some of the industries like retail, construction, and some of the other categories. So as we move forward, we'll just be very mindful and kind of be cautiously monitoring it. That way, as we prepare for the new budget next year, then we can kind of project, have a better idea of what we anticipate we're going to be seeing coming up. So that is just going to give everybody just an overview, and this is on a separate topic, but it's related to our conversion of Tyler with utility billing. As you all are aware, we have closed the utility office last week, Thursday, Friday, and it is closed today. The utility office will open tomorrow. Opened with being under new Tyler. We will start doing billing under Tyler starting tomorrow. One of the biggest changes that we're doing is we're also transferring the service of the online payment service. We're no longer using the previous service. We're going with Tyler customer service, self-service. And so that's going to require all of the customers that were in the prior system to now sign up under the new system. So we might see some kind of delays in processing some of those people's online payments. Public Affairs has been working with the utility office to get the word out to all of the customers. We're going to be doing some mailing inserts. We try to just make sure that everybody's aware that they need to go to the new site and get that set up. So I just wanted to bring that to y'all's attention, and hopefully our billing will go smoother.
So is there some grace, like for the 3 days, 4 days, whatever it's turned out to be, for the closing of the water department and through the transition of this? Is there any kind of grace period that's been offered to folks who normally walk into the doors to pay every month?
There will be no penalties. There will be no shut-offs, for that period. So all of the payments that have been dropped off by the mail, they will be processed tomorrow, first thing in the morning. But so there are no penalties that the customers will incur because of our transitional period, and that will continue as we move forward through through this process, possibly for the next 30 days until we get back to using the new system on a regular basis and back fully operational.
All right. And on the other subject, on the GRT, just wanted to get your professional opinion on the matter. Do you see us right now leveling off, or do you see that potentially, if we continue to see the close down of business and everything, because it looks like with construction we had some great projects, and Lewis probably knows more about that than any of us, that the water tower helped us out significantly in GRT, and there were some other projects that were finishing up Del Norte, some other things. I don't know of a whole lot of projects that I'm seeing starting up right now. So I'm assuming construction's probably going to taper off a little bit right now, or do we think that there's some projects that may be boosting up in that?
Mr. Chairman, committee, you still have the stuff at the college going on. We still have a little bit with the towers. We are opening bids tomorrow for the Lee Deming Bridge. So there's still a little bit going on.
Fantastic. Well, good. That's good to hear.
In addition to that, I think some of the things that Lewis is processing forward is a lot of our activity for a regular annual maintenance of roads, and that will be forthcoming. So you will start seeing some of that. Okay. We never anticipated this impact will last this long. As you can see there, just in our what we thought was going to happen when we were back in March, April, is that it will start going up. But now that we know that it has been extended, the shutdowns will be extended, we want to continue to be mindful of that impact that's going to start occurring, because businesses, for a short period of time we saw that decline, but now it's going to continue even longer. So if we can maintain our GRT above the average that has been in the last 2 years, with the exception of the two spikes from the prior year, then we'll be able to be good going into the new fiscal year. Because we're 2 months behind every time we collect the GRT, we're trying to predict what's going to happen in February and March, and we won't see that activity until then. So we're just going to continue to monitor it on a regular basis, and any activity right now, construction-wise, will help us. The legislature will be going into session. We don't know how much money will be allocated for capital outlay, which that always helps us as well. So we'll just continue to monitor, Mr. Chair. But again, we don't want to be overly optimistic that we're getting out of this anytime soon, and it may impact us going into the new budget.
Okay. All right. Okay.
Not just
Mr. Chair, committee members, we are here to present the lodgers tax reports. Right now, we are trending down with lodgers tax collection as of the October report. The hotels are not able to reach the 75% occupancy that was allowed in October. We hit the 51.9%, and that's reflected in the star on the last page too. We are collecting the 31 plus nights from the hotels and some short-term rentals, but it is a slow pickup at the moment. And then I'll let Juanita's going to talk about the convention center. I'll stand for any questions about this report.
Okay. Good morning, Mr. Chair and committee members. I don't bring great news this morning. I think we didn't anticipate the shutdown to last this long, and based on some of the conversations we've had with our state tourism departments regarding special events and mass gatherings, we don't anticipate any large gatherings in 2021. And so we bring your attention to the lodgers tax collection report. Normally, we are collecting about $1.1 million a year. So far this year, we've only collected a little over $300,000. For the convention center report, we're usually collecting a little over $700,000. Year to date, we've only collected $130,000. So we will be prepared to provide you a mid-year budget report, but at this time we need to inform you that The budget that we presented this year, we will not be able to meet, just based on the number of collections that are coming in and due to the current occupancy limits and the shutdown that our state is in right now. And I do apologize. It's not what we expected, and I'll stand for any questions.
Well, it's definitely not something that any of us foresaw to think would happen. Maybe, I don't think it's ever too early to start having those private conversations, sitting down and discussing, looking towards the future. You know, we've got the, we still have the cost of the additions on these buildings that we have to look at and be determining of as well. So, you know, maybe some upcoming conversations the next month or so as we start looking into preparing for next year's budget, and also if we need to make any determinations for changes for this year's budget. I'm more than willing to sit down. Look at that. Okay.
Thank you.
Do you have any questions or thoughts?
Here, I just wanted to say, you know, I feel bad that you're having to apologize because it's not your fault. None of us knew that this was going to happen. So, thank you, and hopefully, you know, things will start moving in the right direction soon.
I hope so. And then on the last STAR report, I'm going to turn it over to Stephanie. She's going to talk to you about calendar year. This report is a little bit more ugly than our fiscal year report.
Sorry to continue the bad news here. On the last page, the calendar year, I'm going to go down to the bottom analogy here. So we are actually down year to date for a calendar year for lodger's tax by 413,490, and we're down with occupancy year over year by 39.18. Overall, we've collected 641. Last year we were at 1,055,000. So it's definitely a trend in the wrong direction. I would say projecting for next month, I'm looking at what's coming in at the moment, and because of the extended occupancy limits, I don't see that trend changing for next month. And I'll stand for any questions.
No, this report's really good to have.
Thank you.
I really appreciate this. This is something that's, I think for years everybody's barked and wanted this information, and nobody knew how to get it, and now we're getting it. I don't know there's any questions to ask. It's just black and white.
Yeah.
So, do you have anything? Well, thank you for bringing the information to us,
Thank
even though
you.
it's not necessarily what we want to hear. It's what's there. Thank you.
Thanks.
Thank you very much. All right. Juan, what else do we have before we talk about the items that we would have voted on?
We have the PowerPoint presentation from Eric Harrigan, and he is online via GoTo. Good morning, Eric.
Good morning. Hopefully you guys can hear me and see me.
We can hear you. We have chosen not to look at you. I'm just kidding. I'm kidding, Eric. This is Jason Perry. Hope you're having a good day up there and things are going well. We've actually got the presentation on the board for people to see, and we'll listen to you while you tell us a little bit how things are going.
Okay, well, very good. Well, Chairman and members of the committee, Eric Harrigan with RBC Capital Markets. We've put together a few items. The first item that we'll cover is the general obligation bonds and what kind of capacity the city has without impacting the existing debt service tax rate that the city has in place. And so on page 2 of the presentation, entitled History of Assessed Valuation, we've displayed the city's AV going back the last 5 years and what the growth rate has been. This last year, the assessed valuation grew just a little bit less than 4%. This past year, or this upcoming year actually, for 2020 tax year, which is the 2021 fiscal year, your tax base grew just a little bit lower than 2%. And we talk about this and focus on your assessed valuation because this determines, one, your total capacity that the city can have outstanding at any single point in time, and two, how quickly you can retire your debt under your existing tax rate. So if you look at what your tax base has done over the last 5 and 10 years, it's averaged right around 2.4 to 2.5% per year. And so that's what we focused on when looking at projecting out what the city's capacity is. On page 3 of the presentation, this is a kind of a layout of all of the various governmental entities that levy a property tax either for operating or for debt service. So the city of Roswell has a operating mill levy of about 6.6, and your debt service tax rate has been right around 55 cents over the last 5 years, and it's been that way for close to 10 years now. So the total tax rate for the city of Roswell is just over $7, or 7 mils. So on page 4 of the presentation, the city has one bond issue outstanding, the 2008. It was originally issued in the amount of $4.1 million, and it's been paid down, and there's about $770,000 that is left outstanding. The bonds are currently callable with a rate of between 3.9 and 4%, and those bonds are just about to be paid off. Final maturity is in 2022. And because those bonds are callable, there are some options as we talk about the city's capacity for the ability for the city to restructure those. But there are some pros and cons associated with that, and we'll kind of get into that in a little bit more detail. From a total capacity standpoint, the city is capped at 4% of your assessed valuation, which is $31 million. And so with the outstanding debt that the city has of $770,000, your net capacity is $30.3 million. So the city does have a good amount of capacity under its GeoBond program, but going up to that capacity would require a tax increase, and we're not talking about that today. We're just talking about maintaining the current tax rate. So on page 5 of the presentation, I'm talking about potential capacity for additional general obligation bonds. And we're kind of focusing initially on the first issuance in 2022. And that's because the 2008 bonds are paid off that year. And so the city has capacity when those bonds get paid off to issue additional debt without impacting the tax rate. As talked about a little bit earlier with your assessed valuation, we have assumed 2.5% growth in your tax base. And with that assumption and maintaining that 55-cent tax rate, the city could ask voters to authorize up to $6 million to be issued over a 15-year period. 20-year is the maximum that is allowable under state law, but 15-year is in line with what the city has historically done when it's issued its general obligation bonds. So the earliest, under this assumption, the earliest that the bonds could be issued would be summer of 2022 without impacting the tax rate. When the city goes out for an election, and if they are approved by voters, the city has 4 years in which to issue those bonds. And so the city could go go out to voters and ask them for authorization of a bond issue as early as 2021, and subject to voters' approval, that would then allow the city to issue the bonds in 2022. So the city would have to wait about a year after the question to be able to issue those bonds. But if the city so chose, it could go as early as 2022 to the voters, or could also wait until 2022. So that is, without doing any type of restructuring to the 2008 bonds, that's what the city's capacity would look like. If the city was interested in trying to go to voters and issue bonds in 2021, that would require refunding and restructuring the 2008 bonds, and it would require extending the debt out by 1 year. And if you look at the graph on the bottom of page 6, you'll kind of see what the restructure of the 2008 bonds looks like, and then what the debt service on the debt would be. And so, because the 2008 bonds are so short, refunding and restructuring those bonds would more than likely generate positive present value savings, but it would not be sufficient to be considered economically beneficial. And what I mean by that is that 3% present value savings, meaning the present value savings to the par amount that's being refunded, if that's 3% or greater, it would be considered economically beneficial. Refunding and restructuring the bonds would come in below that. It would probably be closer to 1% than 3%. But it would allow the city to issue new money bonds a year sooner, subject to voter approval. And it would allow the city to, take advantage of the current interest rate environment that we're in, which we are very close to our all-time historical lows in interest rates. So that could be a consideration versus waiting a year. We've assumed the same growth in the tax base, and under this scenario, the city can ask for the same amount as in the other scenario, which is $6 million. But the difference would be that it would be paid off over a 16-year final maturity instead of 15, because the city would be issuing a year earlier. So, assuming a spring or a spring 2021 election and voter approval, the city could issue bonds as early as summer of 2021, about the middle of summer, maybe the latter part of summer. And then the graph down below sort of shows what that would look like. We've assumed interest rates for the refunding as of November 20th, and for purposes of projecting the debt service for potential new money debt, we've assumed 3.5%. Now that interest rate is quite a bit above where current rates are. A rate lower than 3.5% would increase capacity a little bit, not dramatically, but it would increase capacity a little bit. So before going on to the next section, maybe I will just pause here and see if any of the members from the committee has any questions regarding the GEO bond and the capacity that the city has.
Eric, this is Councilman Perry. No, I have no questions. I appreciate the presentation. It's very straightforward. When is our expectation? I'm sorry, I was just looking to see the $770,000 to be completed.
So that'll be paid off next year, or sorry, in a year and a half. In August of 2022, those bonds will be fully paid off.
Okay. Yeah, I knew it was 2022, I just did not know when, if it's still trying to see into what fiscal year that was going to pull into. Okay, Counselor Kennard, do you have any questions, or, okay? No questions from Counselor Kennard, I appreciate it. Let's move on to the next section.
Okay, so for the next section, we're talking about solid waste. The city reached out to us looking at approximately 1.2 million in needs for a solid waste compactor. Right now, what we ran a 10-year borrowing at current interest rates, plus 35 basis points. We wanted to be a little conservative on our interest rate assumption. But the borrowing cost for a sale to the New Mexico Finance Authority, because of how low rates are, the city would be looking at a rate of about 1%. If the bonds were sold today, and obviously interest rates fluctuate on a daily basis, you'd be looking at something closer to about 0.7% for a $1.2 million borrowing, and that would generate annual debt service of about 185,000. Sorry, excuse me. We have a typo there. About 135,000 a year in annual debt service. And so that's because of where rates are, and rates have dropped, so low. A year ago, the city would be looking at a borrowing rate of probably a little over 2%. But rates have come down so much that we're looking at right around 1% or below 1% potentially. And so we want to just provide this for your benefit, just to give you an example of where rates are today, and how low the borrowing costs are. And so with that, I'd be happy to take any questions regarding this or any other potential questions.
Absolutely. What are you finding with other municipalities that you're helping with right now during the midst of this COVID crisis? We're in a catch-20 situation. You got interest rates at a historic low, and at the same time you have a collections rate at an all-time low as well when it comes to GRTs and other things, and with people with their jobs and stuff. What are you seeing other municipalities looking at doing right now? It's an excellent question, and I would say that it actually varies quite a bit. We've got a number of cities and counties and school districts that saying, we're going to take advantage of these low interest rates, even though there is some uncertainty out there. Because the rate to borrow is so low, they're trying to take advantage of that. And then there are others that are saying, we're going to put the brakes on this. We're going to sort of see how things, come out. I mean, I think that most of the communities that we work with, 2021 it's okay. What they're really seeing, sort of the pressure, is in the 2022 fiscal year, is where they sort of see the kind of the most pressure on their budget, at least right now. So that's, I think you're probably at about 60-40, 60 saying we're going to try to take advantage of these interest rates, and 40% saying no, we're going to hold off and just sort of see how things, sort of play out. We also have, potential vaccine coming, and what the impacts of that, and does that provide any stabilization to the local economies? Obviously, very, very difficult to tell at this point in time. Okay. Do you have anything? All right. Let's move on towards the airport revenue bond.
Mr. Chair,
I'm sorry, Juan's wanting to say real quick.
Excuse me. I just wanted to kind of give you all a little bit more background information on this particular item. because we are looking at the need. The Infrastructure Committee, as you saw in the packet, and the abstract did vote to approve the request for the purchase of the compactor. And the reason why we're presenting it to the Finance Committee as an option, both as a loan option and obviously the other is through an ending cash, using the ending reserve that's available. But what I wanted to bring to y'all's attention, and the reason why also considering a loan for this item, is because one of the things that we did this fiscal year that we've been kind of working towards is to separate the enterprise funds. The enterprise funds, both when you talk about the airport, the water, wastewater, solid waste, and landfill, they're all individual enterprises that their fees, their rate structure should be paying for that operation and that service. For many, many years, the city consolidated all of those enterprises. So in essence, the water was subsidizing wastewater. The collection side of the landfill was subsidizing the landfill side. So now that we started to separate that and we're going through a rate study, we're actually seeing where each of these enterprises are. Looking at just the year-to-date financial report of just our revenues and then our expenses, water, wastewater seem to be holding their own. When you look at the solid waste side, the collection side is doing okay, but on the landfill side, it's not, which means that the landfill is actually eating up money from the collection side. So as we move forward into the new budget, we want to continue with that trend of separating those enterprises so that they are truly enterprises and they're not relying on the fees from other rates, because that's the whole purpose of setting the rate structure for each of the enterprises. So what we're seeing is, at this time, one of the things what we're going to be asking the council, obviously that the reason for being on the Finance Committee is to request the Finance Committee, do we go after a loan or do we use the collection side of the enterprise on the solid waste to pay for this? The loan, even though the debt service as presented by Eric, it's a lot smaller of a debt service. We are going through a rate study which will incorporate that. Other things to be mindful of is, I know Abraham is working with our engineers on the new cells that we're going to be required to be having to close cell 4, and we'll be opening cell 5A, correct? And of course, so that's going to be a couple of $1 million project. So we have to be mindful of all of these obligations that are coming up, and that's the reason for also the timing for the rate study, so that we take into account so that the landfill side as an enterprise truly acts as an enterprise and generates its own revenue for not only its operation, replacement of equipment, debt service, and as well for any future projects. So again, that's the reason for presenting it, the option for the loan, and again, we'll be asking the council for consideration.
Well, this is a great example, and Eric, I appreciate you putting this in our packet and explaining this to us, because we're not just theorizing, we're actually looking at a project and how this would work and what the current rates would be and how we could see that serviced. So so I think this will be beneficial, especially when we get to full council. But of course, we're not making decisions today. But I think this is a conversation well worth having, maybe to sit down and discuss, and then come back to finance and make some determinations that's going to help with this. Now, is this going to be heard at full council? Since it's come out of infrastructure, are you going to wait till we? Yeah. All right. Okay. All right, Eric, if you'd like to continue with the airport revenue bonds.
Sure, happy to. So just to provide a little bit of history, I think as you all know, the last time that the city issued any debt related to the airport was in 2017. They were issued as enterprise system revenue bonds, paid from and secured by airport net revenues that was sold through the New Mexico Finance Authority. Those bonds have a standard 10-year optional call provision, so they're callable in 2027. And so that's really sort of the earliest point in which the city could look at refunding those bonds. And so any new debt would have to take that debt into consideration. And so at the city's request, we looked at issuing an additional $5 million in bonds, and how could we fit that into the city's existing debt. So we ran two scenarios. The first scenario just assumes level debt service for any new debt issuance, so level payments. It produces higher annual debt service requirements in the early years, but as the 2017 bonds pay off, there'll be lower debt service in the latter years. The pros is that it comes with a lower interest, overall lower interest cost. The con is that you have higher annual debt service in the earlier years. The second scenario that we ran is to take a look at the combined debt service to generate level debt payments for both the, on a combined basis for both the new money borrowing and the 2017. And so that levels off the debt service between the two issuances. The pro is that you have lower annual debt service in the earlier years. There's no decline, though, in debt service after the 2017 bonds have been paid off. But the con is that it comes with a higher interest cost because you're wrapping that new debt around the 2017 bonds. So on page 11 of the presentation, this is from scenario 1 that I talked about in level debt payments. This provides an overview of what that debt service would look like. So the 2017 bonds, the annual debt service is right around $250,000. A $5 million borrowing would have annual debt service of about $470,000. For purposes of running this analysis and to be conservative, we assumed a taxable borrowing, and we did that just because not sort of knowing what the use of that $5 million would be for, because there's a lot of private use, potential for private use related to airport improvements. We've assumed taxable borrowing for this particular example. So assuming an issuance in 2021, the annual debt service would go from about $250,000 to about $715,000 roughly, beginning in 2022, and that debt would be level until 2029, in which the debt service would drop down to about $470,000, roughly $465,000. And then the debt would be fully paid off in 2035. Again, we assumed a 15-year financing, and the graph at the bottom of the page, you can kind of see how the debt service looks. So on scenario 2, where we sort of wrap a new money around the 2017 borrowing to level out the combined annual debt service, we'd be looking at annual debt service of about $630,000 a year, including both the new money and the 2017. And you can kind of see on the graph below how the new money is structured around the 2017 bonds. So that just for comparison purposes, on a level debt payment scenario, which is scenario 1, the total principal and interest comes out to about $6,523,000. On the wrap scenario, where you have level combined debt payments, your debt service goes up to about, or total principal and interest goes to about $6,815,000. So again, the benefit is that you have lower annual debt service in the early years, but you're going to pay higher interest cost over the life of the borrowing. Whereas in scenario 1, where you just have level debt service, you have higher annual debt service in the early years, lower annual debt service in the latter years, and lower about $275,000 lower in total interest. So that just a couple of scenarios to provide for your information about how the city could look at potentially financing and structuring a new money airport offering. And then with that, happy to answer questions.
I'm sorry, thank you, Eric. So if I'm reading correctly, between the two scenarios, by doing option scenario 1, you end up in the long-term saving, what, about $300,000 roughly?
That's correct.
Okay. Okay, all right, thank you. Councilor Kennard, anything? Staff? All right, okay, nope, we can move on.
Okay, the last part of the presentation is just a market update. I'll try to go through this pretty quickly. Just a couple of kind of high level on page 14, kind of high level discussion points about what's going on at the federal level. So of course we obviously had a presidential election in November. There's still 2 Senate seats that are scheduled for runoff coming up in January. But I think the important component of this is what will the makeup of a new stimulus package be, and what's the timing of that? And that's a little uncertain at this point in time. However, it does appear that a new stimulus package would restore tax-exempt advance refundings. So in 2017, under the Tax Cut and Jobs Act, which lowered the corporate tax rate as well as the personal income tax rate, it eliminated tax-exempt advance refundings. But essentially what we're hearing from our folks in DC is that more than likely that tax-exempt advance refunding would be restored under a new stimulus package. But of course, we won't know that until something actually gets passed and something gets signed. But that would benefit the city by being able to potentially refund bonds that are not yet callable with tax-exempt bonds. So it has a potential to benefit the city if that were to be passed. Going on to page 16 of the presentation, this is history over the last 10 years of where interest rates have been and where they are now. And then there's sort of an expansion of this current year. And you can see that we started off, November of last year. Rates started to decline when the pandemic really kind of took, full hold here in the United States. We saw rates spike significantly in March. Really, a lot of uncertainty surrounding, surrounding local governments. And because of the CARES Act and the stimulus funding, it brought more stability into rates. Rates declined. They did hit an all-time low in August of this year. They crept up, kind of heading into the election, and then after the election, they've kind of crept back down again. We're not quite at the lows of where we were in August, but we're very close. But when you look at from a historical standpoint, rates are very, very, very low. And then the last page on page 17, this is a chart that we track pretty closely. The dark lines in the graph or columns, if you will. That's money flowing into municipal bond funds, and that is directly correlated to the demand of tax-exempt municipal debt. And so when it's light blue, that means that there's money flowing out, there's less demand. As you can see, back in March during the beginning of the pandemic, there were significant outflows of money. Money has started flowing back into the market, and so there's been a lot of stability there. There is still strong demand for municipal debt, and so we don't anticipate, if the city were wanting to issue any debt, we wouldn't see any issue with the city being able to access the markets either through a public sale or through the New Mexico Finance Authority. And with that, I'm happy to answer any questions about anything that we've covered or what's going on in the market.
One question that I did have that I was just thinking of: when is our next bond rating up for consideration?
That's a great question. So I would anticipate probably spring or summer of next year. Usually Moody's does an annual review. But it's not necessarily at a set time. Moody's will try to do an update about every year. So that's when I'm anticipating that the next one would be, but it could be sooner, it could be a little bit later. We typically will hear from Moody's and try to schedule something within a month to 6 weeks after they've reached out to do a rating update.
Okay, I didn't know if the COVID crisis or anything has changed any of that and how they're doing in timeline. Okay. And forgive me, Counselor Stubbs is here with us as well, and I did not ask her if she had any questions, and she's shaking her head no. I think everybody's sort of just at a standstill, wait and watch type game right now. I know y'all are like us. You're ready to get into business and get into getting things done, but everybody's sort of in a standstill looking and trying to predict the future. So.
Yep, understand.
No, absolutely. Councilor Kenner, do you have anything? Well, I think that's everything. I appreciate you giving us some time this morning and helping us to better understand all these things, and I'm sure we'll be in contact in the near future.
Sounds great.
Okay.
Well, happy to see everyone, and if I don't talk to you before then, have a wonderful holiday.
You have a Merry Christmas too. God bless. Bye-bye.
Merry Christmas.
All right. Going to look at some of these that would have been on the main agenda for action. Continuing here. So on the solid waste compactor, do we want to continue?
Again, this item will be presented to all of the action items have been moved over to the City Council. We have staff here today to go over their presentations if you wish to listen briefly to the items. So that will leave to give you a little bit of heads up information on the item.
I think if I could hear just a little bit, I'm sorry, and I don't want to keep everyone here, but if I could hear just on two specifically, just to hear a little bit and better understand, maybe three, just real quickly, brief, not anything in depth. We don't need to see the whole presentation, just an overview on the solid waste compactor. Help me, whoever that would be, on some timelines and some different things of what we see in the critical areas to get this done in. What are we looking at?
I'll ask maybe staff to describe the condition of the current compactor and the reason why we need the new one.
Chair and council, thank you for listening to our request. The current situation is that we have a heavy-duty compactor, and we call it the L-John because that's who made it. It's down for repair, and so we temporarily did some work to it to try to use it, but it broke down again. So we are not able to use that until it goes through a pretty major repair. So we're using our light-duty compactor that is not designed for everyday work. It is lighter weight, and it's not as heavy-duty, so we're really kind of pushing the limits of it. And we're not compacting at the rate that we should be in that cell. So the cell is actually filling faster than it would if we were using the heavy-duty compactor. And so the urgency is right there.
So, and how long have we been using the lightweight?
4 months?
Wow.
About 4 months.
So I'm sure that that's taken a toll on it we'll probably end up with maintenance a lot quicker on that one than normally would be expected. So this is something the council definitely needs to get on. And
Yes, it needs to be decided quite rapidly.
okay, all right. Any questions? Councilor Stubbs? No? Okay. Well, I guess I'm the only one that's causing trouble today. I'm sorry about that. Okay, and on the new pickup trucks, what are we looking at with the sorry, there, you should have stayed up there, with the departments, with where we're looking at with purchasing?
Well, this item is actually mostly a housekeeping item.
Okay.
The task force has received an additional grant, and I don't know if you know that HIDA is actually, the fiscal agent is Lee County. So they passed a resolution to accept this grant money. So out of that grant money that they received, $118,000, $95,000 of that money has been allocated to us for the purpose of purchasing vehicles only. So we don't get that money unless we purchase some vehicles. So the guys have come over, we've talked about what they want. It has to be spent, literally spent by 12/31. So we're in a very tight situation. So we actually shopped for 2 vehicles at Malloy Chevrolet in Los Lunas because they have a state price agreement. And so, and I can't remember now if we used the state price agreement or CES. Hang on just a second.
Either way, we've identified and had the...
It's actually a CES price agreement, but either way, we had to pick a vendor that was either on CES or was a state price agreement. So they wanted Chevrolet, and there's only 2 in the state, Tillery and Malloy, and so we shopped there, and they picked 2 pickups. So those pickups have been pulled aside, and they're waiting. They're not selling them. They've pulled them aside, so waiting for this PO.
Okay.
But without council approval, I cannot spend that $95,000. So what'll happen is we'll spend it, and then it'll be reimbursed to us.
Okay. All right. Just wanted clarity on that. All right, thank you. Now, really, the real one that I wanted to just to get some understanding on is the Spring River Zoo fees. I'd like to understand before I go into full council. I understand the need for them. I understand. Councilor Stubbs and I, a number of weeks ago, went out with Jim, and he gave me a full tour. And then Councilor Stubbs showed up, and I took a full tour again with both of them, and we looked at everything. And man, I'm just amazed at what y'all have done out there. I'm proud of y'all. It's just been, it's been an amazing thing to see what's happened, and I'm excited about that. When does our mountain lion get completely into their new surrounding and doing well?
We moved him November 17th. He's doing really well in there. He likes to stalk the keepers, and if you walk on the walkway, he'll sit there and stalk you as you walk it. So he's doing really well in there. He's pulling up some of the grass. He likes to pull up the grass, so I'm sure.
Well, if you put a sign in there that says not to do that, then...
Yeah, don't pull up the grass. I don't think he'd listen. He'd probably just chew it up.
I was very impressed with that enclosure. I know Councilor Stubbs as well. It was something to see. I think that if counselors had an opportunity to really see what has happened out there and the potential of what could continue to happen out there, I think the addition of these fees will be much easier for them to take a grasp of. But just real quickly, just I guess what I need to know, how did we come up with the fee structure? Did we study from other zoos? Where did we come up with the fees? And then maybe some insight on what the concerns were, because I know this was in another committee that declined movement on it.
Okay. All right. So we based our fees off of other zoos that we did here in New Mexico, and also El Paso and Texas, because they're similar to ours. So we did Alameda Zoo, which is comparable. Some of them are a little lower on ours. Same thing with Hillcrest Zoo. Living Deserts were about matched, but a little bit lower on some of them. And then on the next slide, Albuquerque and El Paso, they're really competitive on theirs. We did some private tours this year with a donation of $10, and that did really well. We did about 40 tours, and I think it was, let me see, $1,900 is what we made. So people are willing to pay $10 in COVID time to come see the zoo and all that we've done. So I think the fees that we came up with would be easy enough for people to do. There's also, we put free days in there, so every first Saturday of the month is free. For Roswell residents, children 3 and under are free. Seniors 16 up every Wednesday is free. We also did July 31st of 1966 is when the zoo was opened and established in its current place. So we did a free day there to celebrate like everything that we've accomplished since we've opened. And then the park will stay free currently. Let's see. And we based everything also too based on the resolution that was passed by council, the 19-83, establishing cost recovery levels for Spring River Zoo. As part of that cost recovery, we were required to meet 5% of our operation costs in the first year. This Spring River Zoo resolution for fees will help us get there. Each year the cost recovery percentage goes up, and so this is how we came up with the fees.
So it's pretty tough when a council says, you've got a cost recovery, take care of this, and then you bring something to the table to fix that, and we say no. That doesn't make a lot of sense. So I'm hoping that we can fix that. And I don't want to be unkind. I understand some of the counselors, their concerns, they're valid. I understand that they are looking and trying to recognize a potential population that may not have the ability to go to the zoo every week and pay $10. I don't know anybody goes to the zoo every week, type thing. My wife and I used to take our lunch breaks, and we'd walk around it so many times and do a mile. But for the most part, I think that we're with the added days for the free days, with the educational aspect of it and the different things that we're trying to bring into it. Still with the abilities with the school systems and different things to partake. I think that we have the ability to meet everyone in our community's needs, at the same time be able to offer something even better for all the community involved through this. So I will be a cheerleader, I guess you could say, on Thursday evening. And we'll see if we can't get this done. Okay. Counselors, did you have anything to add? Counselor Stubbs, Counselor Kennard? Counselor Stubbs, use the microphone.
Oh, it is on. Thank you.
It's the big red button.
Mine isn't red. No, I never can do that. It's my fingernails. Thank you, Mr. Chair. I had this thought, now I'm not quite sure, but when we're looking at the admission rates and groups of 10 or more are $3 a person. So I guess if these are children between 4 and 15 years old and they're Roswell residents, they pay $2.50 as individuals, but $3 a person as a group. Is that the intent, for it to be more if they're a group?
So I think if it's more schools or as far as like kid age, it would fall more under the school group age of the $2. And we also have like a fee exemption in there, so we would adjust it based on what the group is.
Okay, so what you're saying is the group of 10 would probably then,
It's based on like adults, so I think for
so
kids
those
it
would be
lower.
adults.
Mhm.
Okay. If they're school groups or school age,
So we could do, adults would be 3 and then kids would be 2, so it's still lower than what the admission rate is.
but I'm just thinking, when your last bullet says school groups, if it couldn't say school age groups.
I can change it to say that.
I mean, just because that would more clarify, and it would mean a Cub Scout troop or a 4-H club or something could come. It's not exactly a school group, but it's a school age group.
Okay, I can change that.
Mr. Chair, that, if you don't
No,
mind.
That's perfectly.
Thank you.
And there again, this isn't a meeting, we're just talking.
Just talking.
And
So-
Mr. Chair, just for clarification to the question, I think because the information has already been submitted and it is in the packet, staff will, during their presentation, make that request notation that we add that additional language there on that bullet point.
Okay.
Just because we won't be able to change the packet
Right.
at this time.
Okay.
Thank you.
All right, anything else? The others are the certification of correctness and the budget adjustment. You're going to go through that before full council.
Well, that's correct, Mr. Chair. I mean, those are all housekeeping items, so we can definitely just cover those at the full council.
Okay. Anybody want to talk about anything else? Or is everybody excited about going back to work? All right, well, there's no meeting to adjourn. We're just stopping conversation. Y'all have a blessed day. See you all Thursday.
Thank you.